Good afternoon, and welcome to our webcast on using indicators to find entry and exit points, one in a series of live events produced by Trader Planet in collaboration with well-known industry personalities. Today is Tuesday, June 1st. Thanks for joining us today. This is Kara Crawford, your host for today's session, featuring Darrell Jobman, a senior analyst for TraderPlanet.com. Today's webcast takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Please also keep in mind that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. We are recording this webcast and it will be posted on Trader Planet, so you will be able to review the material at a later time. You will also find previously recorded webcasts among our other free member educational resources within our site at www.TraderPlanet.com. Our esteemed presenter, Darrell Jobman, trades his own personal account and has been involved in the financial markets for more than 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. While his passion is helping others succeed by teaching the do's and don'ts of trading, his editorial contributions to TraderPlanet.com has really allowed him to take this objective to a whole new level. We're happy to have him with us today. Let's give a warm welcome to our friend, Darrell Jobman.
Thank you very much for that introduction, Dara. And let's do a little housekeeping first to make sure everybody can hear me. The lower left corner of your screen, you'll see a little man. He has his hand raised, a little menu icon there. If you hear me okay, click on that let me know by clicking on I agree. Just want to make sure that you can hear me okay, I see we got a couple of people with the hands up, and there's the check marks. Okay. Looks like we're getting through pretty well to everybody, and I want you to keep an eye on that little man later because we're going to come back with him. But I do have another question right now looking at that little man, and that question feel for what the audience is like is, I am a new or inexperienced trader. If you agree with that, click on an experienced trader. You've been out this 20 or 30 years. You want to click on, I disagree. But if that's you, and you're relatively new or inexperienced and you're wanting to know a little bit more about how to get into markets, how to get out of markets, just click on I agree. Okay, looks like we have some inexperienced people both the inexperienced as well as those people who have been around for a while and hope some new ideas about how you might be able to handle markets. Taking notes, the first is that the data that we're going to be using on the chart is presented to us by CRB. Been around for a long time, providing reliable data, and you may want to put your computer screen on full screen detail as well along in the charts. Today we're talking a little bit about things to be able to into a market, to be able to get out of a market, and to do it successfully. Now I'm calling it the secrets to trend trading success. As you can see, everybody likes to know secrets. They like to be on the inside and that other people don't have. But there's no real magic secret to what we do. That's a little bit of using what is presented in the are telling you. First, I think probably does, and we'll just have to adapt, or you'll have to adapt kind of to what we're about. The head for the trend trading success is to go for the hits and not the homers. There will be home runs, but they're kind of few and far between, and not without a big deal. Thing is to go for the hits, go for the successes, and not try to hit the ball out of the park every time. That means you want to get into a trend early. You want to get out before it's gone, before that profit evaporates. So those are some keys that we're going to be looking at in terms of where to find those kinds of clues. I know Some people say let your profits run, and I agree with that too. There is a point at some early profits because it's a good thing psychologically. It's a good thing to help through what could be, potential. And then lastly, and most important perhaps, is to protect yourself in case you are wrong. You don't want to be there, and so you always want to make sure that stay in the market. You don't want to get kicked out of the market before before your account goes dry. You always want to protect yourself in case you are wrong. Now, the premise that I'm going to be using for what I'm going to describe as a trading strategy is I'm going to kind of base this on a 20, maybe a lot more or less than what you have, but we're using a $20,000 account kind of as our little model. Our goal is to trade with the main trends. That doesn't mean we're going to stick with that trend, ride it all the way up and down like the home run. Trade with the main trend, and that means when it goes that main trend when it goes back up. We're going to use indicators that give some early clues and that will give some exit points. Sometimes we can see trends, but we have to have a point at which we can get in, get out of the market. Our goal is to risk no more than 5% of our account. I would say 5% would be a little bit, that may be necessary in markets such as we're going to be using, like soybeans in our example that we're going to be using here in a minute. But that's a little on the high side. You might want to keep it down to 2%, 3%, which is a recommendation that many experienced analysts will give you. Then, if you do have some success, if you do have some profits, then is the time to take a little bit more risk, maybe widen your stops out a little bit, because it's the market's money you're working with. That's the time to become a little bit more venturesome than you might when it's totally your own money that we're talking about. We're going to be looking at today to be soybeans. This is a vantage point chart of soybeans, July soybeans. When we are looking at our chart, a couple of things will stand out here. One, you will notice, again, we're taking first of all the big picture outlook. One is those highs that are above $10. Now, I know we had $16.50 in 2008. We don't have that now. Now we're running at the highs about $10.80 a year ago, and then we dropped, as you can see, we dropped pretty dramatically and skidded down here $2 or so to $8.80 when we had all that wet weather last year and everybody thought we were going to switch